what is the key differences between buying a home to live in and buying an investment property?
Yeah. So I normally say that when you buy a primary home, I call it an emotional buy, right? So because remember, this is a property that you're buying to live in, right? So a lot of the times it's based on emotions. You like the neighborhood, you like the tiles, you like, the people around the area. Whereas when you talk about investment property, this is another name for it. We call it buy to let. So you're actually buying that property to rent it out. So it becomes a business. So I normally say that process should be economical, because it's all about, is there rental appetite in the area? What kind of investment property am I buying? Is it multi-let? Is it a new development? Is it a Airbnb? So then there's a strategy then that comes after that.
I'm interested to find out, Gavin, around, first-time buyers, and then doing your research around, especially if you want to get into the space of property for purposes of investment, what should buyers be looking out for? How do I conduct my research? You mentioned the different sort of ventures I could get into. I could Airbnb it or just let it out to one person, etc. So what is the first point of research if I want to get started as a beginner?
I would actually say that the first part of it will actually maybe get somebody that can guide you through it, because there's a lot of school fees that you pay if you don't have somebody to hold your hand. But again, we understand that it's not always the case. So I would then start to look at it. There's two parts to property investments that I normally talk about. There is the cash flow side of things, and then there's a capital appreciation side of things. So I always like to use the jargons, because unfortunately the scammers are not going to scam you with just simple words. So they're going to scam you with these jargons, So when so when you look at cash flow, normally you want properties that will turn positive quickly. So meaning that you'll make a profit as quickly as possible. And normally those will be, looking at multi-let. So multi-let is where let me take you to Kokasi. Kokasi, you'll have a house, you have bedrooms. So normally when you do numbers on those properties, you'll find that, even if you have a bond, it will cover the bond, the rental income you get will cover the bond, will cover the expenses, and will change from that point on. Whereas now when we look at capital appreciation, so this is more where we look at equity. So we want properties that will grow in value so that we can either sell those properties at the profit or we refinance them, right? So there's an equity aspect of things. Now, you now need to ask yourself, am I buying this property because it's going to give me cash flow or it's going to give me capital appreciation? However, there is way now when you look at a long-term strategy, meaning that you want to have multiple properties. I normally say that combine the two. So have a portfolio that have both of these two things. Because think about it, in a business, the business needs to run every single month. So you need to cover your overheads. So there's a cash flow element to it. But if I want to grow my business, I need capital to buy machinery. So it's the same thing with property, because if I want to build multiple rooms or whatever the case might be, I'm going to need capital. So I can then refinance those properties that will give me the equity that I need.
We're currently... Sorry, Gavin, you can carry on. Sorry.
So I was just saying that cash flow or capital appreciation, that's the first part that you should be able to then understand before you get through that.
All right. We'll continue unpacking this conversation between buying a home to live in or buying an investment property with Gavin Mkhabela. Don't go anywhere. It's 21 minutes after 2 p.m. Central African Time.
Mix Vibration sur Channel Africa.
C'est notre invité du jour, la belle Aïna Mwenze. Elle est là, certaines l'appellent Boss Lady.
Bonjour Monsieur Jolino.
Parlez-nous un tout petit peu de vous.
Je m'appelle Boss Lady Aïna. Je mets l'accent sur le nom de Boss Lady parce que je mérite cela après le travail fait. Et c'est une rémunération en titre de la personne que je suis devenue aujourd'hui. Épouse et une mère de 4 garçons. Et voilà ce que je peux dire pour l'instant.
Et vous vous êtes lancé dans le business. Comment c'est venu?
En tant que mère et se retrouvant dans les pays étrangers, particulièrement en Afrique du Sud, je me disais que laisser les enfants sur la charge des travailleurs ou d'une bonne, ça serait pas très intéressant. Je me suis dit, bon, je dois essayer de m'organiser et trouver un emploi que je peux faire.
Mix Vibration, tous les dimanches de 18h à 19h, temps universel.
Your afternoons just got even better, fresh and exciting. The Upside, hooking you up with today's news from an African perspective.
22 minutes after 2 p.m. Central African time, we are talking about the difference between buying a home to live in and buying an investment property. And to help us unpack it, we are joined by Gavin Mkhabela, financial advisor and property investment strategist. Gavin, let's talk about the realities for young professionals wanting to get into the property investment side of things. Often the case is we want to rush to buy our first home to live in, but maybe that's not the best strategy. Some want to invest in property rather than buy it as a first-time home. Let's talk about accessibility to young professionals to this particular market.
So look, I think the beauty about it is that you have banks, you have financial institutions that are willing to give you finance, and I think because property has for the longest of time we grew up, we didn't see that as something that is great that we can get into. So we normally would buy cars, whereas now, whenever I mentor young people, I talk to them, I say, look, think about it. If maybe you can buy a property and this property cash flows, and instead of you taking money from your own pocket and paying for the car in every single month, this property can pay the car for you. And the beauty about the property is that normally, and I'm going to use normally because we sort of assume that property appreciates in value, which is not the case. I know that when we are out there talking about these things, we're like, no, it's not always the case. Just like a car is not always the case that it depreciates in value. There are cars that actually appreciate in value, So, but there is now that element of looking at things differently to say that I want to create an asset base. And what I normally also say is that, when you're still young, you're starting a professional, a lot of the times you don't have the responsibilities that a lot of us have. You don't have a kid. You don't even have to move out of home, prematurely. So you can still stay at home, and you don't have to pay a lot of things, so that you use now the leveraging that you have. Because remember, as a young professional, the payslip is your power, is your leveraging power. So you can use that to go and access bonds, and that's where we talk about pre-approvals. Before you even start, get a pre-approval. We do that. We can check for you to say, okay, no, you qualify for R1 million, but don't go and buy R1 million property. Go and buy maybe a 600,000 property that now you can rent out. So that obviously from that point on, you have an asset base, because I think that's what's very, very important. Create an asset base, then that asset base then pays for your liabilities.
Okay. It's a very interesting territory to get into, property investment, particularly for young person, as we unpack with Gavin this afternoon. Gavin, let's talk about a point that you made earlier. I don't think a lot of, African people really understand that there's an option to actually refinance a property. Please unpack that, because I think that's very important in terms of the playing in the space of investment and how you can actually benefit from refinancing a property.
That is a huge one. I think I talk about refinancing. It's one of the words that I use a lot. And I think the situation is that I even say there's a lot of people that are millionaires and they don't know that they're millionaires. And just by the virtue of equity that sits in those properties, but they don't know. So technically what happens is that when you go and purchase a property, right? So let's say now Gavin goes and buys this property at Albertine, I'll just use that. And I bought this property today. I buy it for 500,000. And in the next 3 years, this property is now valued at R1 million. So now technically now I have equity in that property, right? So I can go back to the bank and say, bank, initially I bought the property for 500,000, but now my property is now valued at 1 million. So I want to go and borrow against this 500,000, which now talks about the appreciation in value. So then the bank does an assessment and say, Gavin, you do qualify for the extra 500,000. So now remember that initially when I took out the 500,000, the first one, they paid the seller for me so that I can get this property.
Yeah.
Whereas now when I go and refinance, I'm going to get this 500,000 cash in my account, right? So then I can go, let's say, buy 2 flats of 250,000 each. Now I have 3 properties now from that one property, and the 2 of them are paid up because now remember I bought them cash. Now then I use the tenants that are now paying that rent to then service what I owe the bank, and you'll find that most of the time I now have a surplus that I can now use. So I can then go and say, okay, I need to thank myself, and then let me go and buy myself a car. So that extra 2,000, 2.5 is now paying for my car. So now I have 3 properties and I have a car, which I technically don't pay with my salary.
And now I've got a car that is appreciating in value as well. Maybe I've bought a generational Audi or something.
Yeah.
Whatever the case might be. Yeah, exactly.
Gavin, you make it sound so simple, and I love how you're simplifying the process, because sometimes we end up overcomplicating things that don't need to be overcomplicated. I want to understand from a hidden cost perspective, what are some of the hidden costs that we need to look out for as first-time investors, first-time buyers that we often overlook?
Okay, so the first thing I need to emphasize that it's a business, right? So when you get into this, you must understand it's a business. So funny enough, yesterday I was doing a handover to a first-time investor, and I said it's a business. So you have to understand. So with business, you have to understand there's risks to it. You know, so there's issues around liquidity. So make sure that. For example, if you're gonna make a profit, I know it sounds nice, you'll be making an extra 5,000, but don't chow the 5,000. So it's like you're killing the golden egg, whatever that scenario is. So don't kill that, right? So reinvest it, and then make sure that at the end of the day, you also have some kind of savings in case something breaks. Now, it's even worse when it comes to, let's say, multi-letting, because remember, there is not just one person that is renting in your property. There is maybe 6 or 7 guys that are there. So from time to time, one, I don't know, did something with the toilet, it's blocking and all that needs to be fixed. So you can't now wait for mandate, right? So there needs to be some liquid stationary money that's there to cover all of those things, So you understand that because people use your property and it's not you, right? So they might not treat it the way that you treat it. So that there's a cost element to it. So always do that. The other thing is that obviously, depending on what type of property you want to buy, for example, if you want to buy a sectional title, and this is so sad because I see it time and again when, agents, and because I'm an agent, I run an agency, and we at times don't tell people that, look, when you buy a sectional title, don't just make provision for the rates and taxes, but make provision for levies as well. So levies are a big thing when it comes to sectional title, because time and again there's special levy. So you budgeted 900. Now the special levy is kicking you to about 2,000, and you find that at the end of the day you now have a shortfall, because sectional titles most of the times you'll find that there's shortfall. So meaning that the rental income that you get versus the expenses that don't cover everything else. So meaning that you have to supplement from your own pocket. Now the question is, if you lose then the job, what will happen? Because now you need to fund this beast. So those are the things that I normally say, that at least when you have somebody to hold your hand, they can take you through the numbers, and realistically so that when you get in, you know what you are getting yourself into.